Imagine building a dividend portfolio so large that you make more money from your dividend stocks than you do from actually working at your job or working on your business. Wouldn't that be the life? Imagine you just see in your portfolio $1,100 deposited, $700, $2,800, $550, $900, and it just keeps coming in constantly. And you're not even having to work for this money. It's just your companies are making you so much money that they're throwing off these dividends to you each month. Plus, you're getting capital appreciation on these stocks. That's what we call the snowball effect. Imagine you're rolling around the snowball and it collects more and more snow and it gets bigger and bigger. And the great thing about dividend investing is as the pile gets bigger, the pile gets bigger. It keeps pouring on more and more and more. And so what might start as very modest amounts of making dividend money of $10, $50, $100, a few $100, $1,000 over the years can then compound into many thousands of dollars, tens of thousands of dollars, even hundreds of thousands of dollars, or even $6 billion plus a year. The best example of building a massive snowball of dividend money is Warren Buffett's company, Berkshire Hathaway. They make over $6 billion a year in dividend income, which is hard to even wrap our heads around. Like how much money that is in just dividend income is absolutely ridiculous, right? Let's take it to a much more modest number. Just imagine getting a Ferrari deposited into your account each month. Like that to me would be goals. Like making enough dividend money each month to be able to buy a Ferrari with it, that to me is dividend goals. In this video here today, I'm going to take you through the top 7 dividend stocks to buy right now. And these dividend stocks, it's not just about the dividend money you collect, but I'm looking for companies that not only pay dividends, I'm looking for companies that I expect to up those dividends significantly over the coming years and are going to give me nice capital appreciation. Because remember, there's 2 ways you can make money off a dividend stock. One is the dividends paid out to you. The other is the amount of money in terms of how much that stock's going up over time. You make more and more and more, right? And so this is what we're going to get into here today. All I ask from you guys is one favor and one favor only. Please smash that like button on this video. That's all I ask. I appreciate each and every one of you for being here. Thank you, everybody. Subscribe to the channel. Man, 5,100 new subscribers here in the past 28 days. I appreciate each and every one of you for being here. Additionally, if you want to see the stocks I'm buying and selling each week, then you can join my Patreon. You can also support my content through there. Now, very important. I'm going to put that as pinned comment down there here today. In the next few days, we're going to be going up 30% on these 2 tiers here, the $25 tier and the $125 tier. So if you want access to the Discord chat and be able to see the stocks I'm buying and selling each week, you definitely want to join today. That will be pinned comment down there because we're about to go up 30% on both those tiers. The iMob's about to start collecting their 30%, which is not going to be fun. But as long as everybody's in before the iMob starts collecting, you won't have to worry about the 30% increase. But it's the people in the future that join down the road that will have to pay the 30% increase there, okay? Alrighty, guys, let's get into this. Stock number 1 of these 7 dividend stocks is Wynn Resorts. Wynn Resorts is a stock that's up about 8% in the past year. It's a $98 stock here today. Resort company. Think of Wynn Resorts as taking from the rich and giving to the poor. Think about that, okay? Because that's what Wynn Resorts does. And if you're a shareholder of Wynn Resorts, man, they take a lot of money from the rich because that's who goes to the Wynn Resorts. It's really the top 10% of income earners, top 10% of wealthy. They have their Vegas properties, Wynn and Encore, which are still the premier properties in Las Vegas by a mile. Then they have their 2 properties in the old part of Macau, which are big money makers. They also operate the property in right outside Boston. They have their big dog Wynn Palace property, which is on the Cotai Strip in Macau. And then they have a property they're building in the Middle East right now, which is an incredible opportunity with around 40% ownership there. And it looks like they're going to be in for about $1.1 billion for their ownership portion of that, and that's an incredible gaming opportunity for Wynn Resorts in regards to that one. So very exciting portfolio around the globe. Now, in regards to Wynn Resorts, right now they pay out $1 for every share you own. Essentially, they pay out $1 in dividends to you each year. Now, the important thing to remember about this is that's just a start of the dividends in regards to what's going to happen here over the next few years. If we look here at Wynn Resorts, They were paying out a 50-cent dividend, then they upped that to a 75-cent dividend, then they upped that to a $1 dividend. And then what happened was the world got shut down. We had Rona, right? And so for several years, for over 3 years, Wynn paid no dividend in that time. Think about it. Their properties were closed or partially open. So, it was a bad time for anything resort related, anything hotel related, anything in this sort of area, right? And so they cut their dividend completely during that particular time. Well, they brought it back in May of 2023, and they started out here with a 25-cent dividend. My opinion is that dividend is going to be up quite significantly over the next few years here. Now, if we look at Wynn's revenue on a trailing 12-month basis here over the past few years, this was a Vegas opening back up here, and you can see how that revenue ramped coming off of Rona. And then right here, this recent ramp in revenue, this has been Macau opening back up for real. Macau, they kept that closed down or only very limited opening for honestly years. And that just came back online in the past few quarters in a major way. And this is where our trailing 12-month revenue now lies. We should continue to build that up over the next few years quite significantly. Now, if we look here, operating cash flow has exploded for the company now at this point in time, which when the operating cash flow starts exploding for Wynn Resorts, what does that mean? That means big dividend increases are coming. And that's the situation we've had. Look at this on a trailing 12-month basis, how much operating cash flow has gone to the moon. So my opinion is Wynn's going to probably 2x or more their dividend very soon. And when I say very soon, I'm talking in 2025, in my opinion. I wouldn't be surprised if they up that dividend to 50 cents per quarter, which will then be $2 per year for each share you own of this particular stock. And that's really still just a start. I think they got a lot of room for expansion here. Check this out. This is over the next 4 quarters what they're expected to earn per quarter in EPS. 110 in EPS for the September quarter, 145 for the December quarter, 141 for that quarter, 134 for that particular quarter, right? So keep in mind, right now they're paying 25 cents a quarter. And remember, also, when it comes to Wynn Resorts, they take massive depreciation amortization each quarter, so the reality is they're way more profitable than it looks. But even if you're going based upon EPS estimates here, Wynn's like way under 25% payout ratio, which is insanely low for a company like Wynn Resorts that's a resort company. Like you would expect this company to be more in line with like a 50%-ish type payout ratio. 40 to 60% would be appropriate for Wynn. We're way under 25% payout ratio if they just keep paying out the 25-cent dividend. So my opinion is they'll go to 50 cents easy in 2025, and then we'll likely see them continue to build that dividend in future years. And remember, when that Middle East property hits, that's going to add a whole new segment of money coming in the door and cash flow coming in the door that just is not there right now. Remember, they're spending on that property to open that and on the construction. And then all of a sudden when that is done and then the money starts flowing in, it's going to be incredible for Wynn Resorts. So Wynn Resorts is going to be benefiting over the next decade, and why I believe the dividend is going to be going up significantly over the next few years. Additionally, we're going to be talking about a Wynn Resorts that's going to get great share price gains, because I wouldn't be surprised at all if Wynn stocks $200+ in a few years from now. One, the Chinese middle class has continued to rise, and that is really supporting Macau in a major, major way. Macau used to just be known as like a playland for the rich in Asia, but no, middle class is now the dominant player in Macau now at this point in time. So as the middle class continues to build out and build their wealth over the next decade, that's going to significantly help Wynn, who has 3 properties in Macau, right? And, I know you guys hear a lot of bearishness always on China. Believe me, China's economy is still growing. It's going to grow a lot more over the next decade, and the middle class is going to get a whole lot richer over the next decade in China. Number 2, a lot of new millionaires are going to be minted in India specifically over this next decade. India's economy is going to be booming over this next decade. India, I call it like basically little China in regards to like, if I look at China where it was 15, 20, 25 years ago, that's where India is at right now. And you're going to see India's economy boom over this next decade. And when, we're talking about a booming of an economy, we're going to talk about a lot of new millionaires are going to be made in India. And those folks are going to, it doesn't matter where you are in the world, when people get rich, they want to go live the lifestyle. And especially when you made it on your own, right? You're first generation rich, you go to places like Wynn, you go to places like Encore, you go live the life, right? Number three, the Middle East property is going to be incredible money-making opportunity for them. We've never really seen anything like that. The estimates are big in terms of what that property could do, and I wouldn't be surprised if it does even bigger numbers. Number four, Las Vegas dominance in North American tourism. Las Vegas continues to be, if we're talking about North America, continues to be the big player in regards to tourism. Like Vegas is so famous. Even a lot of folks from South America come to Vegas, right? Big money from South America comes to Vegas. And then baby boomer vacations over the next decade. Remember, a lot of baby boomers have just started retiring over the past few years and are going to keep retiring over the next few years, and they're going to go on a whole lot of vacations over this next decade. And the baby boomers are the richest generation in the history of mankind, so there's going to be a lot of money to be spent at Wynn and Encore in these properties over the coming next decade or two. So Wynn's going to be benefiting from all that. Stock number two of these 7 dividend stocks that I absolutely love is Cheesecake Factory. It's a $42 stock here today. The stock price is up over 21% so far year to date. Now, in regards to the stock, this is what I'm building out significant, right? This is a public account you're looking at, which is available for everybody in my private stock group to see this particular portfolio, right? Now, this portfolio, I have my big 6, right? Which are Meta, Tesla, PayPal, Palantir, Amazon, Elf. All those have gotten me great gains: $776,000, $253,000, $56,000, $188,000, $86,000, $105,000, right? Cheesecake's now sitting on a $15,000 plus gain that does not include dividends I've received from Cheesecake as well. It's now my 7th biggest position in that portfolio. My plan is, in regards to Cheesecake Factory, build the position even bigger. I'm not done buying this one. It's still a steal deal, and I mean a steal deal. So when it comes to Cheesecake Factory, for each share you own of Cheesecake Factory, they pay you about $1.08 per year in dividends, right? Now, keep in mind, the company had been raising their dividends, pretty much year after year for a while. They went from 29 cents to 33 cents, then up to 36 cents, and then Rona came, right? And their restaurants had to be all shut down. Then when they were allowed to open again, it had to be partially open, so their cash flows were affected very negatively. And so Cheesecake, just like Wynn Resorts, had to yank their dividend, right? They took it away. Well, then they were able to finally bring it back in May of 2022, and they brought it back with a 27-cent dividend. They've consistently paid that here, even through the high inflationary cycles and everything they had to go through in regards to that, right? Now, they should be able to up that dividend quite significantly, okay? And here's why. If we look at the next few quarters, they're talking about 49 cents of EPS. So if they're paying 27 cents per quarter, that's around a 50%-ish, payout ratio, roughly around there, right? If we look at the December quarter numbers, that's around a 30%-ish payout ratio. If we look at the March quarter, 35%-ish payout ratio. And then if we look at the June quarter, that's under 25% payout ratio for the company. So there's a lot of room to raise this dividend over the next few years, significantly. Now, additionally, the stock is likely going to perform tremendous. I mean, absolutely tremendous over the next few years. This is not just a story of making a lot of dividend money and making more dividend money. This is a story of making great share gains, because I see a day when Cheesecake's $100 plus stock. So if we look, they're about to go into a cycle of growth acceleration based upon what analysts are expecting here, from 4.3% to 4.7, 5.33, 5.37, 5.64, 5.96, 6.37. So we're likely going to see this company's growth accelerate quarter after quarter after quarter, which is a very exciting cycle to go through when your growth is just going higher and higher and higher and higher, especially when it's expected for many, many quarters to go in the future in regards to Cheesecake. Now, the other thing with this stock is it's dirt cheap, especially given the growth opportunity for this company. Given the dividend yield on this one, it's a dirt cheap stock. I absolutely love it. The risk reward here is so attractive, it's ridiculous. Now, if you check out a video I posted 3 weeks ago on the channel, 5 stocks to buy now, October 2024 edition, Cheesecake, if I recall, was the number 1 stock I mentioned in that video. It was the very first of those 5 stocks. So if you want to hear me talk super in depth about cake, I believe I spent 14 minutes or 15 minutes just talking about cake in depth. Check out this video right here, okay? By the way, I just want to mention this. This was my best video of the year by far, in my opinion. 16 years of stock market advice in 52 minutes. If you never got to see that one, check that out someday when you got some time on your hands, because that's a banger, okay? This was a banger as well, but this was my best video of the year. Alrighty, stock number 3 of these 7 dividend stocks is Nike. It's now or never in regards to this one, folks. You're lucky. If you can get this stock in the 70s and 80s for the next 3 to 6 months, you're very lucky. It's now or never in regards to this one. The stock's down 24% year to date. It's been absolutely just, in a bad place, right? And you only get Nike in a bad place maybe once a decade. It doesn't happen very often. So it's now or never in regards to this one. This one won't stay in the 70s and 80s for very long, okay? Now, in regards to Nike, they pay you $1.48 each year for each Nike share you own, right? Now, this is a company that consistently raises their dividends, 22 cents, then to 24 cents, then 27 cents, then to 30 cents, then 34 cents, now 37 cents, and they'll likely have another dividend increase coming here very shortly. So Nike's a company that consistently raises their dividend, pays you out more and more and more each year, right? Now, when you're thinking about dividend companies and making more and more dividend money and building that cash flow bigger, right, you got to keep in mind stability is key for dividend stocks. And if we think about the biggest, most successful brands in the world, Nike is among those, right? It's a top 25 most successful, most well-known brand in the world. Like, it's incredible. You could go to so many different countries and say Nike, and people will know what brand you're talking about. It's unbelievable what they've done. And so this stability, I think, is worth a lot when it comes to these sorts of dividend stocks, right? Now, I was trying to think, is there any even like remote peer on this list? And the closest thing to peers on the list would be Louis Vuitton, Hermes, and Chanel, right? And Nike's brands over most of those companies, which is incredible to think about, right? And so we're talking about a company that can sell to basically everybody in the world, but their brand is in the same sentence as Louis Vuitton and Hermes, which is companies that not everybody can afford. So when your brand is seen as successful as those brands, but yet you can sell to everybody in the world, you're going to do a whole lot of business and you're going to build a very large business for yourself. And so there it is, man. Absolutely incredible in regards to Nike. Now, Nike, here's the deal. Remember I talked about stability. They've increased their dividend for 23 consecutive years, right? So keep in mind, whatever you get paid for, your Nike shares you own right now, right? So let's say you buy Nike stock now and you make your dollar and whatever it was, 48 cents or whatever, right? Okay, great. You're going to be making likely a lot more next year, the year after, the year after, the year after, because this company goes up in regards to raising their dividends year after year after year. And so as long as Nike continues to thrive as a business model, and they will, in my opinion, right, they're going to keep upping that dividend more and more and more, and eventually it's going to be 30 years consecutive they raise their dividend, 40 years, right? And so that's very exciting when you can have a company that you can pretty much count on year in and year out raising that dividend and getting it higher and higher and higher. So yeah, I mean, there's, Warren Buffett was buying Coca-Cola stock back in the 80s, and from my understanding, there's Coca-Cola shares he owns from the 1980s that he makes more per year on the dividends paid per share than he paid for an entire share. So meaning he's getting a dividend yield of over 100% on his cost basis, which is ridiculous, absolutely ridiculous, right? Oh my gosh, you gotta love it, okay? Number four of these stocks, right? Now, this stock I'm about to share with you here, this has an incredible room for a ridiculous amount of dividend raises over the next 10 to 20 years. They just started paying out a dividend. Just started. Like, the amount of room this company has to raise dividends over the next 10, 20 years is ridiculous. And that company is Meta Platforms. It is my big dog stock in the public count, $977,000 position. We're up $776,000 on this stock, not including the dividends it pays me, right? Now, here's the deal. Meta right now pays you $2 for each share you own of Meta stock, right? But it's a baby newborn. It's a baby newborn, right? It's a new dividend payer. They just paid their first dividend in history back in February of 2024, right? 50 cents. And so look at this and get ready to have your flapjacks flipped, right? They pay 50 cents a quarter. Look at their earnings per share. Now, keep in mind, they pretty much beat their earnings per share almost every single quarter in regards to what analysts are expecting. So don't be surprised if these numbers are too low and Meta comes in and smashes these numbers over the next few quarters. But even given analyst expectations here, 529, 634, 525, 580, 624, 750. Run the math on that. That's under a 10% payout ratio. This means Meta has a ridiculous amount of room to up that dividend significantly over the next 10, 20 years. And imagine what the earnings per share is going to be like at that time. Are we talking about a company that's bringing in $10, $20, $30 a quarter in earnings per share? It's a real potential, right? Now, also keep in mind, Meta's still a young business. I know we think about like Facebook's old. It's new. Like in the realm of business, you got to understand more mature businesses are businesses that have been around for 30, 40, 50 years. Those are more mature businesses. Those are more the usual dividend stocks that pay you out the dividend money and whatnot. Facebook is like brand new compared to those companies. Facebook Messenger, WhatsApp, Instagram, the big platforms that this company dominates on, these are still baby businesses. Imagine where these business models are going to be 5 years, 10 years, 15 years out from now, right? It's incredible when you think about it from that context. So Meta's my big dog, and I project Meta will start paying $1 per quarter in dividends very shortly here, which is equal to $4 per year in dividends paid out, right? So given my 1,700 shares times the $4 are going to likely pay out here, I'm going to likely start making $6,800 a year just off this one stock in dividends. And then I believe probably either in 2026 or 2027, Meta will start paying me 5 figures a year just to hold the stock. I'll make 5 figures a year from just holding the stock. That is pretty awesome, right? And so that's like I said, when the numbers start getting bigger and bigger, things start to get a lot of fun. Because basically, how I think about this, right, is Meta's going to start paying me out 5 figures plus a year in dividends. That gives me an additional 5 figures plus a year. I'm going to be able to either put back into Meta stock and acquire more shares so the dividend amount gets even bigger, or go buy other opportunities out there, which we know is always an incredible opportunities out there in the market, right? And so imagine Meta's paying me out 5 figures plus in dividends, and the market's in some sort of correction or crash at that time, and I'm able to stick that 5 figures plus and buy, great companies with it, right? And remember, this is just one stock I own. Never mind all the other dividend money coming in all the time. This is why I never fear stock market crashes. Some people get really scared. I'm not scared. Like, my dividend companies are so stable that they'll keep paying out huge dividend sums of money, right? And then I get to turn that money around and invest into great companies. If you tell me prices are going to be lower, that's phenomenal. That just gives me a greater opportunity to buy with all this dividend money I got coming in all the time, right? That's the fun with dividends. Now, next stock up here, it's called a sister company, right? This next one, number 5 of these 7 dividend stocks, and that is Google McDougal, the other advertising giant. Yes, Google's now a dividend-paying stock. This stock's up 18% year to date. It's definitely been a lagger stock, which I'm very happy with because this is like a stock I literally just started buying a few weeks ago or so. And so this is a pretty opportune time I look at from kind of a perspective of buying Google shares. So this one started out with this small dividend. It pays you 80 cents a year for each share you own of Google, right? Very small, modest amount. But keep in mind, that dividend's likely going to be going up significantly over the next few years. They have so much room for dividend growth in regards to this one. It's ridiculous. They're expected to have, remember, Google's also another company that beats their earnings per share very often. So analysts have them doing it $1.84, then $2.04, $2.01, $2.17, $2.16, $2.41. And they're paying 20 cents a share in dividends. That's like a 10% or under a 10% payout ratio. There's so much room for expansion of this company paying bigger and bigger dividends. It's ridiculous in regards to this one. But the exciting thing in regards to Google is it's not just about the dividend amount, and they're going to be able to raise that significantly over the next 5-10 years, right? But check this out. I want to compare Google versus 2 peer companies, Apple and Microsoft, right here on 1000xstocks.com. And what we're going to find is Google wins in almost every category, right? So trailing 12-month PE, Google's the most attractive, right? At a 23 versus Apple's at a 35 and a 35 for Microsoft. Forward P, Google's at a 20 versus a 32, almost 33 for Apple, and a 31 for Microsoft. 2-year forward P, 17 for Google, 31 for Apple, 27 for Microsoft. And so it wins that category. Trailing 12-month earnings per share, 47.5% for Google versus 10% versus 22% for Microsoft, right? They win that. Current year expected earnings per share growth, about 34% expected for Google versus 7.5% for Apple and 12% for Microsoft. Next year earnings per share growth, that's the one they get beat at, but they hardly get beat at that. Microsoft analysts have them at 16.9% versus 16.4% for Google, right? Trailing 12-month revenue expected here for Google, 13%. Current year expected revenue growth, 14.7%, and then next year revenue growth expected 11.7%. So, when it did get the 2s in these categories, it's like a really close 2 versus these, it's like way under. So Google's valuation is very attractive, which means this is a company that's likely going to raise their dividends significantly over the coming years. And the share price is going to, produce some great capital appreciation in regards to Google. So I love this overall. I just started the position here very recently in the Patreon portfolio with a few shares, and I'm looking to build that up significantly. By the way, we only have 2 positions here in the red in the Patreon portfolio right now. So that Patreon portfolio is a banger, man, an absolute banger. If you want to see the stocks I'm buying and selling each week in that Patreon, once again, that's going to be the first pinned comment down there today. And to get in before the prices go up in regards to those 2 tiers. Additionally, the second pinned comment down there today, if you want access to all my premium courses, if you also want access to my private groups Discord chat, which is a whole another level of 6 and 7 figure members, and if you also want access to 1000xstocks.com, we can bundle all that together for you. That will be the second pinned comment down there. The Patreon's more for, think about the Patreon as kind of like your, maybe in your first couple years of investing. Think about the private group as kind of like you're a little more experienced, you got more money behind you, you're you know, a little further on, you know, in your journey and things like that, okay? Alrighty, stock number 6, these 7 dividend stocks out there is Este Lauder. So, Este Lauder. This stock, I think, is dividends, but it also has potential for crazy gains in regards to stock price here over the next couple of years. Stock price has been hammered. It's a beaten down dog stock, down 38%. Year to date, it's been a bad situation. Este Lauder owns some of the most successful, greatest makeup brands, cosmetics brands, beauty brands you'll ever find out there in the world, right? And they do business all over the globe. Now, here's the deal with Este Lauder. They pay you $2.64 for each 1 share you own of this particular stock, right? But they were a consistent dividend raiser for a long time. 38 cents to 43 cents, to 48 cents, to 53 cents, to 60 cents, and then to 66 cents, but they've been stuck, right? Because their business model's been in kind of a weaker place over the last year and a half or so. That's likely going to start getting better for them. Their business model is going to likely start improving quite dramatically in 2025 and beyond. But their dividend's kind of been stuck, but even when it was stuck here, it's still a great dividend yield, right? And so imagine what they're going to be able to do as they get that business model back on track in 25 and 26, what they're going to be able to up that dividend to. Maybe they could get up to $1 a quarter in dividends, which would put them at $4 per year. So it's another one of those stocks I look at and I say, okay, I'm getting this yield right now, but keep in mind what I'm going to be earning from the stock 5 years from now is probably a lot bigger number than what I'm earning right now, right? Now, this is a stock I just started buying here very recently in the public count. I'm up to $20,000 or $27,000 worth of shares. I own 305 shares. The stock's at 2016 pricing. I mean, how many stocks are at 2016 pricing right now? Very few, okay? Many stocks are at all-time highs. So I'm looking at this, give me shares, give me shares, give me as many shares as I can possibly get in regards to this one. It's very attractive. And yeah, I really like Este Lauder stock here. So I could continue to build this position out quite significantly. Once they have a new CEO announced, I think that's going to be a big moment for them. We'll see if they are able to steal away Elf's CEO. I don't know what will happen in regards to that. We'll see. But yeah, Este Lauder, really love this one as a dividend stock. Number 7 of these 7 dividend stocks is Whirlpool Corporation. This is a stock that's just over $100 right now. Now, Whirlpool's been hammer, right? Hardly anybody's moved in the last 2 years. I mean, literally, like, hardly anybody's moved in the last 2 years. And if hardly anybody's moving, it's devastating for Whirlpool's business model. And the reason being is Whirlpool thrives when people are moving. Because when people go to move, a lot of people buy new washers, dryers, refrigerators, right? Dishwashers, all these sorts of things. But when people aren't moving, it's devastating their business model. And then you compound that with a consumer that got hammered by inflation for 2 years, and it stuck Whirlpool's business model in a bad place because people are saying, I don't care if my refrigerator's ugly and barely running. I'm going to keep that thing as long as I can because I don't have the money to go get a new refrigerator, right? And that's a lot of the middle class over the past couple of years, right? Now, the middle class should get in a better place in 25, 26, but it certainly hasn't been in the best place the last couple of years. We all know that, right? Because of inflation. So here's the deal, right? This is mortgage originations for properties, right? And this shows you kind of what it was over time, right? And so this was good for Whirlpool, like all those mortgage originations, and then obviously everything went crazy kind of at the end of 2020 into 2021. But here over the last 2 years, it's been devastating. Mortgage originations, like no one's moving. Like everybody's just sticking with wherever they're at. If they're renting a property, they're staying at that same property. If they own a property, they're staying there. They're not moving. And the real reason is mortgage rates have locked everybody up. So you can't really move. It's just unrealistic, right? Do you want to get out of your 2.9% mortgage rate to go move to a 6.6% mortgage rate? I don't think so. So therefore, it's just been a stalemate. The housing market's frozen, right? Slowly, it's going to thaw out throughout 2025 and then thaw out more in 2026. And so you'll start to get some life back in the real estate market slowly but surely. It's going to be a several year process. Don't just think like a lot of people have this false assumption, like Fed's going to cut rates and just everybody's going to go out and start moving like crazy and everybody's going to be buying houses. No. The real estate market moves slow, like at a snail's pace. So the market's going to slowly start to thaw out and get better in 25. Then it slowly starts to thaw out and get better in 26. And then it takes another step in 27 until we get back to more normal ranges. So that's why I look at Whirlpool as kind of like, oh, this could be an exciting 2025 through maybe 2027 for the company, the next 3-year span, because the market's likely just going to get better and better for them in terms of people moving, which is going to benefit their business model quite substantially, right? Now, even though things are frozen out there in regards to the real estate market, Whirlpool pays you $7 per one share you own. Remember, the stock's barely over $100 right now. They pay you $7 per one share you own, and the stock's barely over $100, right? They just paid their most recent dividend here on the 15th of, they're about to pay their next dividend here next month. Okay, so next month they're preparing for their next dividend. So it looks like you have to own the stock by, or everybody has a record of November 15th. Okay. Another $1.75 coming to the shareholders there. Now, they were raising their dividend consistently, $1.20 to $1.25 to $1.40, then to $1.75, but they've been stuck as the real estate market's been stuck since 2022, right? So it's nice that you still make these fatty dividends on this stock, right, which are absolutely incredible. I mean, $7 a year in a bad times for the company on a stock that's barely over $100, that's very attractive, right? Very attractive. Now, if we look at their earnings per share expected here over the next few quarters, it's not like they have a crazy payout ratio. 320 is expected for this quarter they're about to report. Then 407, 215, 291. They're at $1.75. So, I mean, it's not like it's a bad payout ratio given that we're in bad times for the business model, right? Like Whirlpool's in their bad times right now. This is bad times for Whirlpool. It's not going to stay like this forever. The housing market will not stay frozen forever. It will slowly thaw out and will slowly come back to life. And so you got to understand, like no different than the booming housing market we had at the end of 2020 and into 2021, that was not going to be lasting forever, right? That overheating, crazy housing market we had at that particular time. So as things thaw out, as sellers get more realistic with pricing, mortgage rates come down, we're going to see more and more moving activity, right? Which is going to, I think, going to produce a great situation for Whirlpool's business model here. So I think that's really good news. And then also you tag on, like, if people go a few years without adding new appliances because they weren't in a good financial position to add those new appliances, those appliances get old. And, then there's going to have to be a buy-up cycle as things break over time, right? And so that's what's also going to have to play out there. Then you also have the addition of potential new tariffs that could be coming on if one presidential candidate wins, right? I wouldn't be surprised if he goes heavier on tariffs for companies that are not American companies. Like, we'll see what happens with all that, right? But the bottom line is Whirlpool actually sets up pretty good here as a dividend stock. So I actually like it, and I like that they're able to still have a positive, payout ratio that's not crazy given that they're in bad times for the business model. So yeah, Whirlpool's actually a rather attractive stock here today. Okay, folks, hope you enjoyed today's video. I appreciate y'all taking the time to enjoy this one with me on these dividend stocks, building up your dividend portfolio, and best to you in your endeavors and kind of building up your portfolios to become a massive beast over time. First pinned comment down there will be if you were looking to join my Patreon before the price increase happens. That's going to be first pinned comment. Second pinned comment down there will be if you're looking to apply to join my private stock group and get access to all my premium courses, access to my private group's Discord chat, access to the $2.4 million moves I'm making, and all those sorts of things. Much love and have a great day.